Good morning, everybody, and this is your S&P 500 day trade setups for today. So we have not really bounced, but as expected, not an area to be short down here yesterday. We have come back to test what is, in my opinion, a potential head and shoulders, and it's quite a strong area of resistance. And I'm going to get it to you now. So there's my zone. You can see we can call that a left shoulder, head, right shoulder. So that's kind of the one scenario of it, or a big cup and handle. Doesn't matter which way you want to do it. Trend is down on the 8th hour. Trend is down on the weekly. This little tweezer bottom here on the daily with diversion is a little bit concerning. Does look like trying to form a base, but I think we need to wait for the Feds tomorrow before we start jumping to any conclusions. So for me at the moment, we've got a crossover on the daily. We have rejected the 155 daily. So as far as I'm concerned, we should be looking for opportunities to short this. Probably not down here. Would be nicer higher up. But if you look at the chart, way higher up, there isn't really a higher up situation. What is also trying to form here, which is just a little bit more of an interesting scenario, is a potential wedge. But now I'm taking it deliberately from the first two because that's the normal. That was a fake out back into the wedge. So there is my wedge. So now we need to break above for any of this this bullish pattern to actually materialize. We're more than likely going to need to break up above 4,000 and hold 4,000 in order for us to get the next leg up of whatever this leg was, from the low here to the high there. So that would be the bullish scenario on the bigger time frames. But on the weekly, down, up, big engulfing crossover of the weekly moving averages. But we are still flirting with the 155. Moral of the story here is we drop below the 155 and we hold below the 155 on the weekly. You can expect a pretty solid move down, and in my opinion anyway, you will test this area again. You will test anything between these two levels here. So anything between 3,400 and 3,679. So everything hinges on what the Feds do today. That's the starting point, and then to see how the market responds to that. So granted we have a flag. Granted we have a tweezer bottom on the daily. Okay. We need a daily close above this zone here for that tweezer bottom to be validated. So they keep that in the back of your mind. As you start moving down through the time frames, you'll start seeing a different picture emerge. So on the 3 hour, you see the oscillators are starting to move to the upside. We already have diversions forming. There's a previous swing high. Here's the current swing high. We have a massive area of resistance that we are in at the moment. And we're going to fine tune that shortly. And we get down to the much lower time frames. You can see that is the zone that we are in. We have rejected the first level, which is 39.15. We would also be interested in 39.30. And then the other area that you're going to be interested in is sort of at the top of this area here, which is around 39.50, 39.47. Right, so you have fairly strong grouping and a crossover of the oscillators that's happening at the moment. You have resistance to the left. You are in a downward trend on the moving averages. You do have a bit of a trend line up here as well, but that's quite far away from us at the moment. So this to me is not an area I want to be long. Looking to the left, looking what's going on with my oscillators, looking at my moving averages, is not an area I want to be long. This is more an area that I want to be short. So what we'd be looking for today, and it's probably going to be really volatile because we're waiting for the Fed. So what happens is the market tends to drift in the opposite direction so often, just creating value for you, getting you a better opportunity to get in. So there are gaps here to the downside. Going into close, there are quite a few gaps. There's a gap down here, and I think there was another gap further down. Yeah, there's a small one right here. So right at the bottom of the structure, which is sort of the bottom of the wedge, if you can call it that. So you can see the grouping there, and you see the grouping here. There is a gap, and there is also a lot of structure down here. So I suspect, let me just do this. Just want to get that on the hour for us. That would be the one I'd pay attention to. So this swing low here, you can see there's another one right there, and a bit of support found there. So that's kind of the area that I'd be paying attention to. So looking for shorts of 39.30, even as high as 39.47. This would be a nice setup because my stop is above this area here, which is 39, I would say 39.70. Yeah, 39.70 gives you a little bit of space, a little bit of wiggle room, as I call it, just so that your stop doesn't get triggered, because there is a lot of resistance that'll be up here as well. So that's kind of the view that I've got. Somewhere in the space, you're looking for an opportunity short, and you're looking for a move down. What you can do is pay attention to 15 minutes on during the US Open. So, if it does fall during the European session, it'll come back and test this area, unless there's a major catalyst. So, and I don't see any major catalyst, apart from there's a number of central banks that are announcing interest rate hikes, but a lot of that could be priced in. It's just how the Americans respond to their interest rate hike, which is going to be the one you need to pay attention to. So, that's kind of my view. You could wait for price action on here, so that would be an inside bar, engulfing bar, pin bar, off a level. Wait for the structure to form. Put your entry just below, so it'll be a limit order entry just below, and then you put a stop right above that structure, and you'll get into that. So, for example, here is an inside bar. You can see there, trend was down, broke up. There's no real structure to the left except for the gap close. Inside bar, entry is just below, stop is just above that. You can see entry would have been just below that bar as it formed, and then your stop is there. So it's 143 points, and you're looking for the next bit of structure, which would have been 150 points later. So anyway, that's kind of the view that I have at the moment. Paying attention to these three zones. They are big weekly areas as well, so you need to just keep that in the back of your mind. See, there's a weekly swing high there, and one right here as well. So we have closed below it, so I would expect us to go and test it and then continue down. Okay, if we start breaking the wedge to the upside, all bets are off. Then we need to start looking for a change of direction, for sort of a continuation to the upside. Then this is going to turn out to be a higher low, but a really volatile higher low. Okay, anyway guys, that's it for me. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.